Today we have our guests, Shivi and Utsav. You guys started your career at companies like American Express, Uber, went through multiple startups, and now have your own startup. Kaaj, how are things going? We want to learn more. We want to know all about it. We also want to understand your perspectives about personal finance as a founder. So let's begin with an introduction. You want to introduce yourself to our guests?
Of course. Thank you for having us, Priyanshi. Hey everyone, I'm Shivi, one of the co-founder of Kaaj, and I started my career with a startup called Snapdeal, and then moved on to work with American Express. I've always worked in fintech, in space of credit and fraud risk. And post American Express, I worked with Uber Payments as managing payments fraud there, and then with another neobank in San Francisco, and now building Kaaj with Utsav. So super excited to be here. Thank you.
Thank you.
Yeah, thanks Priyanshi for having us. I'm Utsav. My background has been in AI and machine learning. Started my career with Snapdeal, spent a couple of years there, then spent 5 years at Uber, pre-IPO to post-IPO. And just prior to this, I was building self-driving cars here in San Francisco with a startup named Cruise. And now building Kaaj with Shivi. Super excited to chat with you.
Wonderful journey. Let's start from the beginning. You remember your initial relationship with money, like when you were growing up, or that feeling of first paycheck? What did you do with your first paycheck when you got from Snapdeal, I guess?
Yeah, I remember first paychecks are always very special. Almost spent all of it on buying gifts for everyone around. So it was something really special moment for me.
Yeah, same for me. I bought a lot of gifts for my family, and I remember buying, I think, two stocks, which was like $1,000 each, and that was pretty much it for my first paycheck.
That's very nice. That's a very intelligent move.
Two stocks with $1,000.
What are they today?
I think still at 1,000.
As your career has evolved, how has your relationship with money changed, especially around financial security, financial planning, or future outlook?
For me personally, I was fortunate enough that in my first job, my manager was also my mentor for preparing me or helping me get onto the personal financial savings journey. And he was the one who educated me on how to do investments, how to invest in mutual funds. And that's how I got started.
Yeah, I think for me, like it has changed and evolved so much because I was super interested into investing and whatnot when I was very young when I started my career. But I think as things started to become more busy in my career, I sort of lost the touch on doing active investing. And mostly, most of the funds would be like passive investing, either index funds or mutual funds, as Shivi was mentioning. And then at some point, like some of the money is not even managed, it's just sitting idle somewhere as things have become more complex in the last 3 or 4 years. So, yeah, much active earlier in my career,
Then
much passive right now.
And you guys, of course, also started your career in India, and now you moved to US. It's been a while. How has there been a financial cultural shock, or the way you look at money from being in India to being in US today?
Yeah, I think a lot has changed, especially I think the culture and the vibe in the US is very different compared to India. I think especially like the how people look at investments and whatnot. I think in India we have these traditional sources of investing in gold and real estate, etc. People are like, you don't hear people talking about stocks a lot, or like especially technology stocks. Even if someone's buying stocks in India, it's like Asian Paints and these traditional companies. But here it's all about betting on the future. Nvidia, IT stocks, and
Especially in SF.
software, AI, especially in SF. So I think from that perspective, like the mindset is very different between India and US. So yeah, it has changed a bit. I think it's also become, as we were saying, like it's become slightly complex as well because we have some money in India, some money here, etc.
And we should not forget that one of the reasons that I also respect you guys for is that you're co-founders, but you're also married. And money is tricky as co-founders, as a couple. If you look at it from outside, it's like putting all your eggs in a single basket. And how do you balance risk in your startup and your financial outlook, which is now together?
Oh, that's a great question. I think after we went all into startup and started working together, we started thinking about these things a bit more seriously. Because before this, our stocks or our finances were kind of diversified because we were working with different companies. We were getting RSUs, options, etc. from different companies. So it just diversifies that automatically versus now here. And that's how we started thinking about financial management. And Honestly, that's where we were having a chat and we got to learn about Alfonso, learn about your journey, and you folks have been real supporters in that journey for us. So it's good to have that support, help us to learn about things and how to diversify our savings, not just put it. We used to save all our options, our RSUs, and not sell it into the market. So now is the time we're thinking about it or started to put in multiple different pools.
About that, of course, you guys are using Alfonso and it has been helpful, but I'm sure your journey started by interviewing multiple people, talking to other wealth managers. Tell us more about that. Like, how was your experience? What did you think they really got well and what you thought they should have understood better?
Yeah, it's actually a funny story. We were I think on a Friday morning or Saturday morning, we just walked up to our nearest bank, like Chase. So we both bank at Chase. And we were there to like deposit a $300 check. And they're like, we also do wealth management. You can take a free session with us. And we were like, yeah, sure. I mean, we need some management. So we just went there. And that one session turned into a 2 week sprint where we had to prepare so many PDF files and documents and had to submit so many, like all of our accounts, etc. I think at the end of it, the thing that we did not like about the wealth manager was that we didn't think that the incentives aligned because they were only trying to sell all of the products from Chase. Like even the mutual funds that you had to buy were all from Chase. All had their own like interest expenses. Account expenses on those mutual funds, etc. So we didn't feel that it was a very good incentive driven model.
But if it has good returns, then and like it's a big company. If it has good returns,
It is.
Why not?
Yeah, so one of the things was they wanted to wanted us to move all of our money into Chase. That was like the first thing. So we had accounts, I think, in 3 or 4 different places and whatnot. And by the time like Robinhood had also gone out in the market. So we had different pools of money at different places. And we didn't feel the need to move into a central account. And if it were just performing at the same level as the market, then like what's the added advantage to so yeah, I think it was like more about, do I trust this person to not have their own incentives?
Yeah.
Because it's a bigger company.
Yeah.
It's the biggest bank. So that was the apprehension, and that's why we are open to having more conversation outside of Chase and these bigger banks. I think that's what we mentioned in our first call with you as well.
Yep. That's especially important. That perspective is especially important because you guys are someone who's very close to banks. You guys work in fintech. You have experience where you're like, doing this day in, day out. So how do these struggles map out through your journey in a startup? Like, do you think being in fintech shapes your experiences working with money differently?
In a way, yes, because I have also worked with banks. And so I have seen the journey of different people and how, especially in the US, the average deposit or the savings rate is very low. People live paycheck to paycheck, and that was one of to your previous question. That was one of the actually cultural shock that I got because in India you have a lot of savings.
Savings for your generation,
yeah.
generation after generation.
And when you're working with a bank, you actually see that for real. Especially the bank that I was working with, it's a underbanked population, so the average deposit size and the PPEC was very real. Looking at the numbers, and that shapes your perspective as well. Given that we moved from India to the US, we were looking for options for CDs or how do we go beyond ETFs and stocks. And that's where we started learning a lot more about differentiated or diversified sources.
Got it. One thing I want to understand more is, so yes, of course, you've had that India mindset of saving and, being financially free so you can serve multiple generations. And then you're in US where it's like credit economy and like people live paycheck to paycheck, as you mentioned. So today, after like almost spending half and half in both states, both countries, your working life, how do you shape your perspective today about money? And how do you visualize financial freedom? Like, what does financial freedom mean for you guys?
I mean, we live in SF, so financially free means a whole different level here. So I think, I don't know what those numbers are, but I think it's like $3 to $5 million or something of net worth. So I think it's very different on how people in SF treat money and what net worths and benchmarks are. I think for us, it's the ability to spend the next 5 years of our life the way that we want to do, paying the bills month over month. I think that's something that's a base level financial freedom for us. It's not a luxurious car, it's not a luxurious life, etc. So yeah, it's mostly about that, and that was one of the reasons because why we chose to do a startup at this point, and both of us wanted to do a startup at this point, and we knew the risk that we're, you know, going away with a huge opportunity cost for at least 2, 3, 5 years.
This is very helpful. Tell me more like you guys, when you were planning your finances independently versus today when you plan it together and you plan it for like your baby or startup together, right? Like how does that shape up? How has that been different than what it used to be?
We used to track our finances. We started tracking, I would say, we started tracking finances together after we got married. But both of us were not actively into management of money. We just knew how much we have in different accounts. The best we would do is put it in some CDs or ETFs, nothing beyond that. So we did not optimize for financial management from that perspective versus when we started or decided to do the startup together, it really required us to plan it out for at least a couple of years ahead because we had not raised until then. And that was one of the reasons we wanted to make sure that while both of us are jumping into it, we have enough financial security so we're not worried about just all the finances. We wanted to focus more on building startup at that moment. So that was the base level calculations and how the next 6 months may look like.
Of course, it takes like money calculations, but it takes a lot of gut courage to make that decision and ultimately take the plunge. And of course, we're all very proud of like you taking that plunge and taking Kaaj to the heights that it is going to today. So really excited about that. I guess like one thing I want to understand is like when you grow up, you think about money with emotions a lot.
Yeah.
And over time, emotions and logic start like, fighting with each other on is this a good decision to buy that? Like, I don't know, IKEA wardrobe. versus how do you today think about money and how do you balance out logic and emotions, you'd say, in this point of your career?
That's a great question. I'd say it helps to not have a lot of desires or not have a very luxurious lifestyle, just sticking to basic needs. It helps you focus more on what your needs are and where you want to focus your energy. So both of us at this point, I think we're very much passionate about doing the startup. That's the first priority and everything else is a second.
It's wonderful. You were to go back in time and give one advice to Shivi and Utsav working at Uber or even like Snapdeal, what would that be about money?
Buy Nvidia, I think, or some private stock for
The
open
1,000
AI.
rupees should be spent on.
Just Nvidia. It was actually very funny because I was very young and just created an account on Facebook, and that's when Facebook, I think, entered India. That's when Facebook also IPO'd in the US. So I was pitching my dad to buy Facebook stock.
Oh my God.
100 rupee, 200
You were
rupee,
young
whatever.
with that.
Obviously, like it's with money. That's the whole reason. Like you have to execute, and somebody who's great at it has to manage it 100% of the time. Otherwise, you're just missing the bus. You're just missing a lot out. And that's the fundamental reason. Like as founder, even before when we were working in our companies, we didn't have time. We didn't have the knowledge to manage that much amount of money. So that was like the first reason to talk to wealth managers and like start the journey of managing.
That's great. To wrap up, I think like just an open-ended question, like the way you think about money, has that changed over time? Like your belief about money and what has stayed constant?
That's a very deep question. What has stayed constant? I would say money or wealth, it is important. Can't say that I don't need it at all. It is important to have that financial security to let you or to give you freedom to do things that you want. That thing has stayed constant. So just build the base foundation that you need to get there. What has changed? I would say after a point, you realize that anything above it is good to have.
Right. Yeah. So it's important, but it's not that important.
There's money. But yeah, as Shiv has mentioned, like we've all been. So I think the worth of money is still the same. You still spend with an eye out. You still look at the menu on the right hand side of what the prices are. So I don't think that there's been any change in the kind of expenditure that has happened. Having said that, we do understand now that we're sort of comfortable in a way where we don't have to worry about the bills and the paychecks and whatnot. And that's where like we want to be more aggressive in pursuing our dreams, and not having to worry too much about those short-term financial decisions.
It's very well put.